Afternoon, everyone. There's an opening slide and a poll that will show up in just a second. So while we're waiting for everyone to log on, we have just one question poll for you. Right. There's the poll. So maybe we'll have results of the poll towards the end. I can't quite tell if people are answering the question. It is a sincere question, so please do answer it. Welcome, and thank you for your interest in this report. I'm Jotru Bawa with the California Reinvestment Coalition. Members of our coalition are organizations who serve as financial first responders and communities of color. With them, we've worked on issues related to equitable access to banking for over 30 years. We've advocated successfully with the federal banking regulators and won consumer protections via state policy. We've sued the administration, the federal administration when necessary, and we've negotiated community benefits agreements with banks. And in the midst of the pandemic, we started a program to create access to information related to all things money and financial management for low-income families. This program, CRC's Economic Equity Promotora program, provides vital education and access to needed financial resources. Make no mistake, the people who the program helps are already financially literate. They know how to pay their rent, they know how to pay their cell phone bill, and they know how to budget for groceries. But what they might not know is how to shop for a low interest credit card, how to avoid predatory lenders, or they may not feel comfortable with all that is required to open a bank account. And that's because many of them live in areas where there are no banks. There are bank deserts. You'll not be surprised to hear that we're still pushing back on redlining practices. There are still significantly lower number of branches in communities of color than in white neighborhoods. A lot of attention is given when a branch closes in a community, and rightfully so, but we are proud to partner with CVB on this research to expose the same discriminatory pattern exists in banks' decisions about where to open new branches. New branches are in fact being opened. We expect to raise this research with banking industry regulators and hope other stakeholders such as policymakers and investors find this study useful in assessing the progress of banks' DEI policy. Findings from this study should be a wake-up call to bank executives to work harder to open branches in underserved areas. And finally, we are excited to partner with CVB in releasing this study because we believe in the strength of workers in advocating for equitable access and consumer protections for our communities. Please note that there is a strong connection between how bank workers are treated and how that impacts customers and the surrounding community. Tasia Barnes, a bank employee, was expected to speak today. Unfortunately, she's experiencing some difficulties getting on the webinar. She's in Florida being pelted down by the hurricane. You're welcome to send well wishes to her. We think she'll be fine. We can share her remarks and connect any reporters who are interested in her story for an interview. In the meantime, and without further delay, here's more on the actual research findings with Nick.
Great. Thanks so much. And it's so exciting to partner with CRC in presenting this research in finding these connections between bank workers and consumers and bank customers and understanding how they impact each other. I just need to get screen sharing so I can share my uh, presentation. Let's see here now. Okay, great. Here we go. My name is Nick Weiner. I'm the senior organizer for the Committee for Better Banks. We bring together bank and credit union workers to improve conditions and service to consumers through collective action and forming unions. The genesis for this study grew out of two issues we heard from our members. The first, as you would have heard from Tasia Barnes, is that branch workers, tellers, and bankers are feeling the stress and strain from chronic understaffing at existing bank branches. And you would have heard her describe in detail the kinds of transactions that you have to do in person, that it's not everything can be done digitally these days. And so tellers and personal bankers are being pushed to do more with less. Second, Black, Indigenous, and people of color bank workers have shared heartbreaking stories of being passed over for internal promotions without even getting an interview. Our previous Bank Accountability Project study analyzed the hiring and advancement opportunities for BIPOC employees at 13 of the largest retail banks, and it found just how deep racial bias runs in the banking industry. For this study, we decided to examine whether branch openings over the last 11 years have been distributed fairly to all neighborhoods, regardless of race and income. We thought this would help us understand who banks considered would be their future customers. We already knew, as was mentioned, that banks disproportionately close branches in low to moderate income and BIPOC communities. But were they replacing them with new branches, or were they pouring salt on the wound and also opening branches disproportionately in upper income, majority white neighborhoods? What we found sheds additional light on the institutional racism that is baked into our system. We had a great team of digital specialists who extracted branch opening data for 14 of the largest retail banks from the FDIC branch openings data from January 1, 2010 through December 31, 2021. And we joined this with federal census data so we could identify the race and income characteristics for the census tract where each new branch was located. To define an area's income level, we use the same ranges that the Federal Reserve Bank uses under the Community Reinvestment Act. Low to moderate income areas have a median family income of less than 80% of the area median income. Middle income is 80 to 120%, and upper income areas have median family income greater than 120% of the area median. We used ArcGIS to visualize these results, as you can see from the zoomed out map of the United States, with each circle representing a cluster of branch openings in that area. It looks like there is quite a lot of inequity in where new branches have been located. The numbers also bear out a stark story of bias. Combined, the largest 14 retail banks opened 4,130 branches over the last 11 years. And as you can see, the majority, 61%, were located in middle and upper income and upper income majority white communities. Surprisingly, we found that wealthier BIPOC neighborhoods actually fared worse than low to moderate income BIPOC areas, with only 6% of branches opening in them. To put these totals in perspective, the 14 banks in our study currently have approximately 25,556 branches nationally, employing an estimated 220,000 people. So over 16%, or 3 out of every 20 branches, were opened in the last 11 years. And every year, this percentage grows. Since the number of branch openings varied widely by bank and geography, we decided to calculate the odds of a branch opening across communities, differentiated by income and race, and compared to majority white upper income census tracts. This enabled us to evaluate the 11-year trend of disparities in branch openings. As you can see, there's some variation among these 14 branches, but only on the margin. and mostly only in the low to moderate income majority BIPOC communities. But overall, communities that were not middle or upper income majority white areas had less than a 20% chance of having a branch open in their community, compared to the chance of a branch opening in the wealthiest majority white areas. And again, if you lived in middle or upper income majority BIPOC communities, you had the worst chance of a new branch opening near you. And overall, it looks like Bank of America seemed to have the worst bias of the location of their branch openings across the board. When we analyzed this data at the city level, with few exceptions, we found the same trend, with Boston, Dallas, Houston, and New York City having the worst odds across all categories when compared to upper income majority white neighborhoods. The story map visualizes this data and can be found at our website, bankaccountability.org. Users can explore the data both by individual bank and by metropolitan area. As you scroll through the story map, you'll be able to zoom in on each of the individual metropolitan areas in our study. And you'll be able to see where individual branches have been opened, along with a brief summary of the data. Each circle identifies the location of each individual branch and signifies whether it is in a majority white or majority BIPOC census tract. And again, the census tracts are color-coded by income category. Green is upper income, purple middle income, and orange low to moderate income. And then if you click on an individual branch, you can see its details, which of the 14 banks it is, its service level, address, and data was open. We want to make this data available to others, so we've also created a dashboard available for those of you who would like to dive into it and extract data by financial institution and by metropolitan area. So if there's a city not highlighted in our study, you can extract those numbers and create your own map. So this study helps us understand that brick and mortar branches are not a thing of the past. All communities need them because there are some transactions you just need to do in person. But without more pride and pressure, big banks will continue to overlook many communities that need access to financial services. That is why we believe there's a role for regulators to more forcefully use existing tools, particularly the Community Reinvestment Act, and enforce community benefits agreements to reduce the disparities in where banks are opening branches because of its harm to both customers and to workers. Thank you.
So hello, my name is Tate Hill. I'm the executive director at Access Plus Capital, and just wanted to share a little bit from a community perspective about the importance of brick and mortar banks to the financial health of a community, especially in underserved, low-income or BIPOC communities. Access Plus Capital is a community development financial institution that serves Central California, that provides both loan funds and technical assistance or business coaching to those businesses that need access to capital, and typically in communities that are underserved by mainstream banks. We work in Central California from Kern County up to San Joaquin County. A large portion of those communities are agricultural rural communities, and where more than 60%, 60 to 70% of the population are BIPOC, with a very large Latino Hispanic community. And our experience has been in engaging with banks in the financial industry that we've seen, one, a significant number of bank closures here in Central California, but also just the lack of additional new banks that are beginning to open in those low-income communities. Just referencing the bank accountability data resources that Nick just shared, we're seeing in places like Central California and places like Fresno, that the 14 largest banks and the 14 largest cities highlighted in the study, that you're seeing kind of the same experience in Fresno, where the new banks that are being opened are primarily in communities where there are or they are not majority BIPOC or LMI. For example, the chance of a branch opening in a majority BIPOC community or low-income community was 1% over the last years, compared to branches being opened in upper-income communities and majority white communities. At the same time, over this period, we were also seeing a significant number of bank closures due to either mergers or banks just leaving those particular communities. We saw actually 0 branches opened in high-income, majority BIPOC communities. And it was also impacted by, again, low-income communities, whether they were majority BIPOC or majority white, that those communities also did not see many branch openings. And why this really matters in places like Central California or places like Fresno, where it's a mix of both urban and agricultural rural areas, is access to capital and the resources that bank branches provide, especially for many individuals that might have English as a second language or may not be as familiar with financial institutions. That ability to be able to engage with someone at the branch to meet their financial service needs, whether it's general services or maybe lending or other questions that they may have, the ability to have access to a branch and individuals in that branch makes the world of a difference. In communities like Central California, where there are high underbanked populations, is really critical. And many of our rural communities are finding where there actually are no branches, or if there is one, those branches have limited services. So we really saw just the importance of highlighting this report and the need, just as banks are doing those closures, where are they opening branches in the Central Valley?
Thank you, Tate. As I wrap up, I want to remind you that during the pandemic, we saw that wealth absorbs harm. If our families had savings or equity in their homes or businesses, they have assets they could rely on so that they can weather economic downturns better. But one can't get on the road to building financial assets unless we have access to safe banking. It is the first step towards building financial security and wealth. All bank stakeholders have a role in ensuring that the distribution of where branches open in the next 10 years do not look the same as the last 10 years. Banks executives must look to do better to serve communities equitably, regardless of race or income. Investors must demand change because providing branch services to more communities is good for the long-term growth for everyone. Policymakers and regulators must include branch metrics while evaluating bank performance. Lack of access has severe consequences for low-income communities, and we need the regulators to use their power to ensure that there are equally severe consequences for banks who relentlessly engage in discriminatory practices. Thank you for your interest in this topic. Thank you for joining us today. Please use the Q&A function to pop in your questions, and we'll take it from there. So I think first off, Nick, there's a question in the Q&A for you. Are you able to read and address it?
Sure. Right. The question is, because there are more, is it that branches in high income areas are more profitable, and that's why we're finding more branches in those communities, as opposed to it just reflecting a racial bias or discrimination? And so sort of a couple answers. One is, as I mentioned, wealthier BIPOC communities actually fared the worst in terms of branches not being located or opened up in those communities. So if it was purely a profit motive, those communities would have been on par with the same wealthy majority white neighborhoods. And we found the opposite to be the case. So something's going on there, and there's more research to be done to understand if there's some nuance there. But I think that disparity is so great that there's clearly a bias going on that has something to do with race, not just profitability. The second, I would say, is that from talking to bank workers, and it's sorry again that Tasia wasn't able to join us. You would have heard that the mission of bank workers is to sort of, it's like quantity. I mean, they need to constantly bring in more customers and more products, regardless of income. There's really the big banks like JP Morgan and Wells Fargo, et cetera, is based on deposits from millions and millions of customers. And now with digital banking, they can come from anywhere. And so, regardless of race and income, but then where they're investing in brick and mortar to actually serve those customers, to have a personal relationship, that's where the bias comes in, because that seems to be where the bank is making that kind of commitment. So there's a number of disconnects, and I think it's clearly there's bias has been baked in for since these banks' inception, right? Wells Fargo is founded before the Civil War, and so those things don't get fixed overnight, and this just helps to reinforce that we have a lot of work to do. And if someone else wants to add.
Yeah, I would just share there, Nick, and we saw just the importance of bank relationships in the last 2 years during the pandemic. And I think it was stated earlier that that relationship with a banker or someone at the bank makes a difference. And we particularly saw this with small businesses that were left out, particularly the first round of PPP loans, because they didn't have a banking relationship. They may have had a bank an account, a business bank account, because they did not have that relationship, knowing how to effectively navigate those kinds of opportunities. And so when there's a lack of a branch presence, and other forms of engagement in that particular community, it does create harm to those individuals. And also, there are particular services of individuals that may not be as financially literate, that may have challenges in accessing certain services online, or the complexity of certain components of certain kinds of transactions that those individuals may need, where you actually need to be able to speak to someone at a branch. And so that kind of combination, particularly in areas that are rural communities where, if the branch has been relocated, that relocation might be 30, 50, 60 miles away from where that rural community is. And so while it may be a little bit less of an issue in urban communities, you could say, well, they could go across town. But in our rural communities, it has adverse effect, because that means usually, tens of miles away from the nearest available branch.
Thank you, Tate. Nick, there is another question, perhaps in how to use the tool. How do I determine if a location is in BIPOC neighborhood? What resources can I use to determine the result?
If I'm understanding, sort of in the tool itself, you can differentiate between it's the the branch dot will be white or black, right? Will, tell you if it's in a majority white or majority BIPOC area overlaid on the color of by income. So that was sort of a way we could try to visualize, the race and income in one place with the branches, if that's the, if I'm answering the question correctly.
There's another question. I'm truncating it a little bit. So what are you saying, that banks have actually opened less in BIPOC areas and that more of them closed down in the pandemic?
I think, yeah, that's what we're saying.
That is what we're saying, yes. That's what the data is showing.
Yeah, and that, right, where branches have closed, less, attention is, hey, do banks still open branches? And it turns out they do, they have been opening branches. And so we thought it would be worthwhile to, understand where, because that's really looking to the future. Banks see their of tomorrow and what, and in spite of this kind of already mentioned, with digital over the place, regardless of where the physical branches are, but where there's certain things that you have to do in person. And I think there's another question that gets to this. And you would have heard more of this from Tasia, because she's a personal banker and will say, like, she would say she loves digital banking, but if you've got a fraud complaint, you have to come into the branch. If you're a small business, a lot of small business transactions, you have to come into the branch. If you're a new immigrant, you have to come into the branch to have your documents verified. There's a number of things like that you just can't do online. And so if you don't have a branch in your community, you're at a disadvantage to access those services, not to mention, right, folks who aren't comfortable using digital banking or don't have good internet access or broadband, and so it makes it difficult for certain communities as well. And so there's a lot of reasons why we're still going to need brick and mortar branches, even if the footprints, change or there's fewer of them overall. That number should still be equitably distributed, particularly since banks are not just, because they are integral to our economy and our lives, and they have a mandate to also serve a public interest, not just profit motive, right? So even if that's the case, right, that they're, they couldn't just and shouldn't, I don't think, be allowed to only open and have branches in the most affluent areas.
Thank you. That also addresses perhaps a little bit of what you're asking, Derek. Is digital banking significantly less accessible to BIPOC and lower income? Nick, is there more you'd like to say? I know you already gave examples of why that's the case.
Yeah. Well, I'm sure Tate has
Yeah.
some examples from the community perspective you might want to share.
Yeah, again, I think we're seeing the need. I mean, I think Nick, you spoke well to just the importance of those branches and community, and also, there's been studies that have been done looking at the trust factor of BIPOC communities of financial institutions, and that building that relationship is so critical to that. And particularly, again, for our rural communities, which are, in Central California, but across the country, these impacts are exacerbated, in those rural communities where there is not sufficient broadband access, where because of locality, proximity to additional services are a challenge, where maybe there are only one or two banks in a particular community. If one of those closes or both of those close, what impact does that have to the economic viability of that community, right? In certain kinds of businesses, you need to be able to actually do a physical deposit of if you're a bank of your income, of your revenue. And so all those things have an impact on those small businesses, on the economic viability of that community. And so, this concept of, how do banks better serve? And you would think to some degree, and this is just, my guesstimation, that, going forward as digital transformation does happen and finance, that there actually will be a justification to have branches in LMI communities specifically because of those barriers, and where wealthier communities may be able to more readily make that transition into digital banking. So I think there's, again, going to be a continued need for our branches and our LMI and low-income communities.
There's another question, actually continuation of this question, and I wonder if you have thoughts, Tate. You've been at the table with us negotiating CBAs and doing work to hold banks accountable. The question was, how is redlining still happening? Why does the CRA, why is CRA not able to rectify this kind of difference in where branches are? You're on mute.
Yeah, it's really interesting, and that's, in part why we're also very, you can say excited, but are glad that as a part of the Dodd-Frank Act, Section 1071, that will expand banks' requirements to report lending data and to really demonstrate, where are they providing services. And so, and particularly that act will require them to show race and ethnicity information around small business lending. And so, I think with that kind of visibility that the general public and regulators will have, it will enable us to better engage with banks about around those discrepancies, about the lack of services. And then we do know there is that alignment of resources, both either grant funds, loan funds, financial services, staffing resources, branch location, based on, in part on, also on that their CRA, their Community Reinvestment Act activity. And so being able to have those branches does make a difference around their CRA assessment areas and where they choose to do activities. And so, there's been some discussion about moving away from those assessment areas, but the importance of having that level of locality of a bank or a branch in a particular community. And so, there's been ways to leverage kind of the system through like ATM networks and others that provide some level of access to resources. But again, I think as we've stated here today, there's certain transactions, there are actually a number of transactions that you can't necessarily do through an ATM. Some of those things can't be done online. You literally have to go into the branch to be able to receive those services, and so it still is important.
Yeah, and I'll be remiss if I didn't take this opportunity to mention that the Community Reinvestment Act is currently being updated. There was a public comment period, and the California reinvestment community submitted a lot of comments on how we need the federal regulators to improve this set of regulation. And one of the big things that our community is insisting with the federal regulators is that banks actually not be given a high rating at all times. So often what we see with exams, with bank exams, is that even when there is a disparate impact that is seen on the books of the banks, the regulators will still give them a passing grade. There are community benefits agreements that we work really hard to negotiate, typically during times of mergers and acquisitions. We can look at the disparities in their lending data in the Home Mortgage Disclosure Act and other places, yet the federal regulators do not necessarily look at the implementation of the community benefits agreement when they are either approving or providing exams of the newly merged entity. If join us in this advocacy with the federal regulators. It's important that they hear that yes, the redlining set of rules are still race blind. They continue to be race blind. And that, in turn is not solving the issue. There's another question here for you, Nick, about the data. Alan asks, does your data account for branch relocations, where, for example, a lease expires and the branch relocates nearby in the same service area? This may also occur to reduce the square footage being leased.
Let's see how the FDIC, the data, it's for new branches, not, so it wouldn't include, branches that closed and renovated and opened up in the same, but it would include branches that opened but could still be in the same service district. We viewed this as like, if that was happening equitably, you wouldn't have these wild numbers because it's looking at the branch opening. So, at the end of the day, we didn't think that undercut the analysis.
Thank you. There's another question regarding public banks. Could you talk about public bank efforts in California? How soon could that be a reality? I wish I had better news. The pandemic really put a pause on the advocates who've been pushing for a statewide a California public bank, but we do have regulation that allows municipalities to establish their local public banks, and local public banks are in fact underway in the Bay Area and in Los Angeles. At CRC, we won AB 1177, or we passed AB 1177 last year. What that is a California public banking option. So the Department of Financial Protection and Innovation is going to study the feasibility of establishing a fee-free financial services account, much like CalSavers. If you're familiar with CalSavers, California Treasurer's Office runs a program where if a 401k is not offered by your employer, or if you're a contractor, you can still take advantage of pre-tax dollars going into a retirement savings account. This would also, AB 1177 Cal account would also be a similar service provided by our California state government, where a fee-free financial services account would be established. It could happen in partnership with one of the big banks, or it could actually be a service that California sets up otherwise. So there's a Blue Ribbon Commission. The CEO of CRC is on that commission to provide some oversight that this study happens with the utmost, attention to the needs of BIPOC communities. The study will be out, or I think the Q2 of next year, by summer next year, and we'll see about establishing fee-free services for Californians then. Thank you for your question. Paul says he's re-asking the question, what mapping solution do you use to determine if the location is BIPOC majority? Is that?
Well, it's a percentage of the population of the census tract. So that's how we determined. I mean, it was just a pretty straightforward, simple, calculation. That's how we sort of mapped it. So the majority of the census at the census tract level.
Thank you. Do you have data on marginalization of small business owners who are BIPOC, LMI, in terms of branch access or credit access in general?
I mean, that specifically was sort of outside the scope of this particular study, although it relates to it, obviously. We've tried to, there's been some work at analyzing like the PPP loans as an example recently. So there's some studies out there about that kind of come to the same conclusion of how difficult it's been for BIPOC and small businesses generally to access those loans. So, it's a problem, but it's not something specifically that we looked at in this study.
Tate, are you familiar with any studies you would want to highlight related to small business owners and lack of access?
Not any newer studies. I would say just in general, there is a FDIC a credit survey that comes out that does do breakout of businesses by size, by ethnicity, and the challenges that they're having in accessing capital. And that's very specific to lendable capital there. And so that also, even though that's not exactly about bank branches, but it also does provide just some general knowledge and information about access to credit, access to capital for operation.
Yeah, I think in California, there is an iBank infrastructure bank, and the idea is essentially to really provide more capital to CDFIs, to community development finance institutions like Access Plus Capital, because there is a wide understanding that small businesses, particularly in BIPOC neighborhoods, do lack access to credit. I think we are constantly looking for a reason other than the one that is the obvious one, which is that traditional banks tend to view investment in BIPOC communities with BIPOC community members as riskier. The loans are more expensive and there are less products out there. So we really do rely on a network of CDFIs to fill that gap. Last year, CRC started a resilience fund. It is an investment from some of the larger banks who acknowledge that there is a gap in services, and we're doing, some capacity building of burgeoning CDFIs because they have, specific ties to communities like street vendors or, specific monolingual speakers and ethnic small businesses. I want to say Professor Google will have lots to share in terms of studies out there for this. I think I'm not seeing. Oh, there's another question. Is the underlying raw data behind the study available anywhere?
There's a dashboard that I mentioned, which is essentially has the raw data in it. It was a way that we could try to provide it for folks. So we can provide that in a follow-up email, how to get to that.
Great. I don't see any other questions. Any other comments from our panelists? Essential thoughts you didn't get around to relaying earlier?
Well, I mean, I guess, my last comment, just to reinforce the notion that frontline bank workers who work in branches really care about, regardless of the community that they're in, care about serving the best interests of their customers and having that personal relationship. And so, it's a problem when that's not available for everyone in an equitable way. And, bank workers feel that and want to, it's compounded by increasingly branches being understaffed, so that if there's fewer branches serving, a wider area, and people have to come from outside the community to find a branch, then the remaining branches are still underserved and in the staffing level, but have right customers coming in. I hear increasingly, if you want to go see someone in a branch, you might have to book an appointment a couple weeks ahead of time. And so, there's this additional issue of staffing, so that even if the branches were distributed equitably, customers wouldn't be able to be served in the way that they need to be. So it's an ongoing problem, and we're happy to, again, partner with CRC and Tate. Glad you could this, and share that perspective, because of the future of where banks, these big banks are headed, in where they're going to, what kind of communities they're going to invest in. So thanks again.
Tate, any comments from you? There's also a question if there are any banks getting this right.
I'll leave that the getting the right question to you or Nick, but I think just the importance of raising these issues, and I think the attendees have had some really great questions, both just reviewing and wanting to analyze the data, which is great. Also discussion about what policy next steps need to take place, and then what can those who are champions for access to financial services can do, whether it's writing a letter about CRA reform, or at a state level when there's legislation that comes forward here, particularly in California, or just making those expectations known to your bank. Nick just gave an example of getting to a place where people need to make appointments, and whether you like that or dislike that, to be able to speak up and be heard in that. I think for us, we're going to continue to support, access to capital, with our vision that, access to capital itself is no longer a barrier to financial success. And so until we meet that goal, we'll continue to have work to do, and really appreciate the partnership here.
So finally, I guess I'd just like to say that we're and we'll be sending this out to folks after this webinar, in that we think there is an opportunity for folks who think that there's a problem with getting the regulators, bank regulators that are currently updating the Community Reinvestment Act to make sure that branch openings are included in that metric, and particularly since the community benefits agreements, as CRC and other groups lead those negotiations with banks when there's a merger that comes up and they're under review. There's a real opportunity to get banks to do more, and to do more equitably and fairly. And the regulators have a role in helping to enforce this and make sure banks live up to their commitments, because that's the only way we're going to fix the wrongs of the past and the ones that'll happen in the future if we don't switch course. So we have an online action that we'll be sending out to folks that you can participate in, and that we can have our voices heard, because if we get enough of you to sign on, we'll get the bank regulators to listen. So look for that and sign on, and thanks again for joining us today.
Thanks, everybody. Have a good one.